Good morning, January 5th, 2015. UPBOptionMillionaires.com. It's a Monday. Stock futures are down almost 0.25%. You can see the pullback we have here at stock futures. We see if we put in a little less of a pullback than we did in the middle of December, which would bode well. And if you look from a long-term perspective here, love this support. The Abenomics trend line broke really sharply below it in October, had a little bit less of a dip below it, although the snapback rally was mind-boggling. And we're coming back to that level. I expect this to act as support, and I think over the long haul we're going to get back up to this 213 level on the SPY, the inverted flash crash. Remember back in 2011 we had the flash crash. Stocks were pummeled. They bounced back, but ultimately came down to that pummeling low and then some. So that's what I'm looking here for a move up to the top of this trend line, and then a move possibly breaking out to even higher levels. You can see this trend line has offered upside resistance, and then to the downside this Abenomics trend line has offered support, and I'm looking for a move up to this level, about 213, 214 on the SPY. Let's look at crude oil because it's getting pummeled this morning to new multi-year lows on inventory glut, and you can see this morning just getting killed. It's just off its session lows. You pull back, we've got a lot of room to go before we get down to the levels we saw in 2008, 2009. Would be supported about 37. It looks poised to break through 50. And if you look back, I mean, just 6-7 months ago, how bullish everyone was on crude oil. We had a Middle East crisis back in June. Everyone thought that that was going to lead to higher prices for crude oil, higher gas prices, and we were going to go to 130. Oh, you know, the headlines, 160 a barrel coming, question mark. And then we have done nothing but collapse ever since. So yeah, here we are right here. You can see the session lows here, crude oil. On the flip side, we have the US dollar getting bid up. Look at this. We're over 92 on the US dollar index. And if you look back, I mean, we're looking at highs we haven't seen since 2006. Look at this. Breaking out. You draw a trend line across. There's a key support resistance area here from 2004 and 2006. And we are just about breaking above it. This is very bullish for the US dollar, which let's see what it's doing to bonds this morning. James Bond. And you can see bonds are up about 2.2%. The ETF that tracks it most commonly used to look as TLT, which is, look at this, from last week, putting in a nice flagging pattern here. We'll see if we can get up. Again, I was talking about TLT in one of my charts, so I think it's going to break to 140 this year. I think I put it up at Stock Twits. But you can see the nice move up, hit resistance at the 119, 120 level, and is really starting to make a constructive move. This is a monthly chart. So if you look at bonds, all of last year was down something like 2 of the 12 months. The rest of the other 10 months, we're seeing significant buying pressure, and a lot of it has to do with overseas. Although quantitative easing has slowed down here, we're not buying back bonds. The ECB, the Abenomics, you can look, some of the bond yields over in Europe are less than here in the US. So why would you put your money into a Spanish bond? The company was about to go bankrupt about 2 years ago, when you can go here in the US and get a higher yield on a bond that the government can print all the money in the world to support it. Never going to go bankrupt, right? Inflation might rear its ugly head. The dollar might be worth zero, but those bonds are never going to be defaulted upon. Let's look at some individual names here. Wynn Resorts on Friday. Look at that candle. And I think we could be seeing a move, I believe, up to 190 here in 2015. Of course, some really negative data out of Macau. Back in November was a 20% decline. December, 30-something% in activity over in Macau. So if you look here, I mean, we have supported about the 137 level. But it's been such a really dramatic pullback. You know, the market's forward-looking, so it kind of knew somehow back 6-9 months ago that the data was going to start to soften, and you can see the decline. And now that's being priced in. We get support here. I'm looking for a move up on Wynn Resorts. You can even trade that via Las Vegas Sands, which is really in the tailspin as well. Let's look at XLE because this is something to watch going forward. We're right at this key level. We've broken through it a couple times. So this is a monthly chart. Pull in a little closer to the 2-year, you can see we're right at this level. This morning we're down almost over 1%, and I'm looking for the continuation to the downside. I think this lower oil prices is good short term, but longer term, again, 9 months down the road, some of these companies are going to go belly up, which is going to affect not just energy and oil. It's going to go out and affect some loans and banks, people who bought these bonds. But we'll worry about that when that time comes. Caterpillar, I love this for continued downside. You can see it had a nice move up. So when it was at $100, I didn't think it was going to head back to 100 anytime soon. We're below support and resistance here, and I'm looking for a move down at about 85 and 80. I don't think the stronger dollar is going to help some of these corporations that have a lot of sales overseas, but that remains to be seen. I'm just saying right here at this current level, I like it for downside under 90. You can see it's down 1.8% this morning. FEYE, security, is going to be a big theme here in 2015. FEYE is poised. Do you look back at about similar time last year is when the big rally started for FEYE. I'm not saying we're going to see a move up to $90, $95, but I do like it short term. The 45 I'm in the calls is one of the stocks I really like in 2015. Same with Twitter. Twitter's at support, starting to move off it, and I think this is going to be a stock in the short term. It's going to be back over this trend line, former support, now resistance level. Breaks above it. We're going to be in the 50s. Google is another stock to watch in 2015. It sold off really the last 6 months of the year from its highs there, just about $600. Bounced at the 509 level, putting in a nice flag here, and I'm looking for a move over 550. A couple more stocks to look at. Of course, Apple. Apple pulled back in a sharp fashion on Friday. This morning's kind of flat, so we can look at support at about the 105 level. And then this trend line it busted through a couple weeks ago is now acting as support. So we look at 105 as a possible. At least if it gets down to that level, would be at least a point of interest to go long. Let's look at IWM, which broke out to new record highs last year. It's come back to the support line. I think we're going to continue to break to the upside. This chart reminds me a little bit of if you pull up the S&P 500 and you go back to the there we go. And you can look, you have a consolidation here. I mean, if you just put it, it's a nice trend line. On the top end here is offering resistance that it broke through in 2013. And then on the bottom end here, we have the two crashes, the internet bubble, and we had the financial crisis acting as support, and we have just broken out in the S&P 500. I see in the short term, same thing with IWM, consolidating here, and it's breaking above, and it's going to break out to the upside. All right, UPBLC in the chat room at optionmillionaires.com. A couple more videos up today as some trades I'm looking to get into. Other than that, I'll see you in the chat room. Everyone have a great trading session, and we'll see what crude oil does. It's going to bounce here today. I mean, look at USO just getting pummeled. Again, look at its beautiful channel since the lows in 2009 and just breaking down. Now we're under 19. We're down 2.7%. All right, everyone have a great trading session. I'll see you in the chat room. Goodbye.